You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it is time once again for your bi-weekly source for all things options related. I'm talking, of course, about the Option Block. And before we dive into it, let me remind you here at the top of the show to check out our mobile app in your app store of choice. The iTunes App Store, and of course the Google Play App Store, even the Amazon/Kindle Fire App Store. A lot of great places for you guys to find this app and check it out. I think you're going to like it. A lot of you already have, clearly, and you're liking it. But if you check it out and you have some feedback, something you'd like us to add, let us know. Let us know. You can do it right through the app. Click on that contact button and let us know what you think, or shoot in some questions or comments for your favorite shows. A lot of great ways for you guys to do that over there in the Options Insider Radio Network mobile app. And joining me today on the old all-star panel, we got our usual wrecking crew back in place. Everyone is back from their collective, shall we say, illnesses and ready to roll. Starting off with the man I know all of you missed on the last episode. He's back, hale and hearty once again. None other than the Viceroy himself, Mr. Alex Jacobson from Options Express. Alex, welcome back to the program, sir.
Thank you, Mark. It's good to be back. I feel like the chaperone is back, so but it's good to be here today.
Yes, we certainly need a little adult supervision on this show every now and then, Alex, and I think you fit that role quite nicely, sir. All right, and also joining us, beaming in from the hinterlands of Maine, where he is enjoying those hot skates and delicious lobsters, none other than the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
Always a pleasure to be here. I'm thrilled and pleased as punch, but our ice is melting. The ponds are starting to thaw as we got some temperatures over freezing the last few days. So it's not as fun anymore. It's mud season is coming.
I was going to say the party's
fast.
over in Maine now, right? Everyone just leaves and they come back in December.
Everybody that can leave Maine in the month of March does, pretty much. And then they come back in springtime. It's just an ugly month. I think it's the only not pretty month in Maine. March is the toughest one.
It's the great March exodus in Maine. I like it.
It
Many
is,
books
it
have been
is.
written about the trials and tribulations of the Mainers during the March wet season. It is
Trying
indeed
to get their boots out of the mud.
Yes.
I think a whole business, some small business called LLB,
Yes.
was founded on those mucking around in March boots.
Someone saw some gold in them thar hills and went after it. Speaking of gold, we are also joined by our resident gold bug. He's a happy fellow today. Good old Uncle Mike Tosaw from RCM Asset Management. Uncle Mike, Welcome back to the show, sir.
Always a pleasure to be here, and I feel your pain, Andrew. We had such a great snowmobiling weekend last weekend, and then the worst part about it is that the Fox River freezes. Great snowmobile ride for a while, and then we get some higher temperatures, and then now it's going to be cold again, but it's not going to be cold long enough for it to refreeze for a safety on a snowmobile. So I feel your pain, but spring is coming.
You guys had your polar vortexes. I don't want to hear it. You had your Arctic deep freezes. It doesn't get much colder than it did this year. So you had your chances for deep, soul-crushing freezes.
Oh, and enjoyed them.
And it was great. I got out all kinds of time this winter. Thrilled, pleased as punch. I even lost weight this winter, which is bizarre for me.
It's all that hot skating, sir.
It is.
All right. And before we dive any deeper into the polar vortex rabbit hole, we're going to keep on rolling right on into our first segment, the trading block.
The trading block.
All right, everybody, those bells, those shouts mean it is time once again for the trading block, the portion of the program where we dive deep into what's going on the old street today, what's moving ye old markets. And it was an interesting one. Most of the day spent firmly in the green, firmly in rally territory, with most of the major indices up about 1% on the day or so. We seem to have given back a little bit of that towards the end of the day, with most of the major indices still closing up strongly, but not quite as strong as they were intraday. Most of them closing up about half or a little bit better, half a percentage point, 0.6 of a percentage point. The S&P and Qs both closing up that way, and the Dow a little bit higher, 0.7 of a point or so, about 100 handles in Dow land. So still a strong day. Still, of course, continuing the bull rally, yet not perhaps as strong as it was during the earlier parts of the session, in spite of the fact that we're rallying, and in spite of the fact that all is apparently right with the world here, volatility still holding on somewhat. I mean, it came off a bit today. Of course, fixed cash coming off about 0.4 of a point here, closing at 14.29, but not taking perhaps the shellacking some might have expected. Of course, some of that is the weekend trickling back in, and some of that is that there seems to be a little bit of a floor these days in vol, with people not wanting to go much farther, being willing to actually pay for some premium these days. Senior G, a.k.a. the Rock Lobster, is that your take as well? You think vol is holding somewhat comparatively strong here, given everything else that's going on?
I think I would concur with that assessment. It started off the day getting hit pretty hard. We were up over 1% at one point, like 110, something like that. But what I've noticed with the volatility is, we're kind of moving, like as the way the VIX moves, we're moving up the index curve, which pulls VIX down because those at-the-money volatilities are kind of getting lower and lower and lower. But vol per strike in the S&P 500 was actually up today. One of those odd days in the S&P 500 where the VIX drops. It's just kind of where the volatility is actually moving. So the volatility is staying in for the simple reason, if the S&P 500 is going to move 20 handles in one day, that's over 1%. Kind of hard for the volatility to drop too much below 14, when you have that sort of intraday moves that are so huge. So I would say, I think we're kind of in for this 0.5 to 3/4 to 1% moves. Feels like 2 or 3 days a week on relatively small news. Simple as that.
At the end of the day, there still is some realized vol, so there's only so far they can crush the implied before those two start to intersect. And I think we're starting to see some of that at play in the marketplace right now. We're moving. There's some life in the markets. So the previous expectations of single-digit vol perhaps not coming to pass anytime soon.
Yep.
This is probably about as low as we're getting. Maybe who knows? Maybe we'll dip down to the 12 handle or so. But this is probably as low as we're getting for the foreseeable future, I would think.
For the next couple of days, at least. I mean, whatever this emerging, it feels like there's still this burbly thing that's making its way into the marketplaces. So it hasn't quite stuck its head above the surface, whatever this emerging markets crisis thing is. So, very hard to determine, because there's no real good economic news. It's not bad, but is it good to kind of push us to all-time highs? It's like, not really. So hard to figure out.
You can't derail that bull. He just wants to run. The man wants to run. Speaking of diehard bulls, Alex is not one of them, but yet he is up next anyway. Mr. Viceroy, known as the one who likes to throw cold water on all things, including the endless bull market. What was your take on what was lighting up the tape over there at OX today? Give us a little bit of preview, a little bit of insight into the Express block, sir.
So I remain bullish for what it's worth, but two things that were on the tape today. Facebook has become the new Lululemon up here. It's become kind of the trader's name of choice in both the cash product and the options. And a lot of the traditional, what I'll call the traditional names, the Netflixes, the Teslas, lighting up the tape today. But eBay, a new name, and this is the icon effect, was active today in both the stock and then across the board in the long-dated options. People clearly with icon in there and making noise were buying calls all the way out to the Jan 15 leaps. We saw a number of orders here for the 60 calls today. But today was kind of a strange day because we all kind of looked at each other and said, okay, we're up big. There's no news. Why? What's going on? And we kind of shook our heads, and some of us looked at the Schwab research, was kind of scratching its head. And there was a lot of difference out there. Ukraine, Venezuela. There's more talk about more financial challenges in Greece, and nobody seems to care. I mean, we are the cleanest shirt in the pile, and we see that in rates, and we see it in the market. And 3-4 months ago, I think we would have expected to be 340, 350 on the 10. We're not. And today's rally there was a visible rally, and there was a stealth rally, and the stealth rally was in kind of all of healthcare and all of biotech and everything energy related. The stocks were up today. The drillers were up today. The futures were up today. It was across the board. So still scratching my head, but I'm loving it. I think we're going to power through 1850 and get up to 1900. And then we'll see.
All right. Mr. Tosaw, I alluded to it earlier there at the top of the show, but it was indeed a good day for some of your favorite holdings, including the shiny stuff. Walk us through a day in the shoes of Uncle Mike Tosaw today, the happiness that ensued today.
Well, first off, you're under the assumption that I'm wearing shoes right now, but we'll leave that to the imagination.
You diehard St. Charles hippies. I know your lot.
There you go. They got the flip-flops and the long hair going. That's how it is. A couple things. First thing, I want to remind everyone that never in the history of the entire S&P 500 had there been a better time to sell than today. We did have new all-time highs in the S&P today, so it's kind of exciting when that happens. And just going through today, I closed out a credit spread, which I'm going to talk about in the strategy block a little bit later today in terms of how volatility worked in our favor a little bit this past week. And also in the gold market, gold went up. And that's, I guess it just always goes up now. It used to always go up all the time, so it'd be kind of fun if it always goes up again too. One thing that we're doing right now with gold, instead of doing a collar this time around on this rally, we're going to try and catch it again like we did before. And we're trying to, in lieu of selling calls, we're just taking extra money and selling put spreads as a means of financing the long puts. And on days like today, it does make it much easier to do that. And I think we're going to continue to do so. Right now, we're in the mode to where it's broken out. And I think there's a lot more upside to come in the shiny stuff. But if not, that's why we have the hedges in place.
I like it. The old put spread in lieu of the covered call. You're doing the broken wing covered strangle, if you will, to coin a new term. AKA
broken wing covered strangle.
AKA the short put.
Okay.
Or the short put spread, whichever way you want to lean there. I'm always trying to inject new confusing terminology for our listeners out there just to contemplate on while they're listening. Mr. Giovinazzi, before we roll on out of the trading block into the odd block, I know I kind of pigeonholed you there into VIX land. I know you like to play there, so I like to start there. But I know there's other things you guys look at over there in option pit land throughout the day and things that your clients are weighing in on, saying, Mr. G, give me your input on X. So now is your chance, sir. What else was lighting up your clients' tapes? What was really causing them to bother you today and take up your precious time, sir?
Two big things is basically when's the next vol shock going to come? So trying to plan for that, which we were looking at, sort of ways to trade VXX into our next pop in volatility. I assume we'll get one. And also, a lot of calls going up in Nvidia that got some attention. It used to be kind of a popular stock, hasn't done much in a while, but it's up a lot and there's more call buyers. Actually, we look at it in the odd block. I mean, some is divs, but some is dividends, but they're clearly somebody's buying out of the money calls and you're not getting any dividend collection there. So stuff like that, mostly just trying to ultimately right now, the only trade really is to be long. So if you're not, you're scrambling with some short gamma, and with volatility fairly priced, it's kind of hard to sell juice in the index and really, unless you're just selling put spreads and be right. So
yeah, they don't need to listen to this show today. They can really just tune out and just buy stock and they're done. Who needs anything else, right?
It does feel like it to some extent. So, maybe with the volatility lower, it is just time to buy some calls in some of these stocks that are moving higher. Like I said last week, I thought the Qs would be a place where you could find some value in all those higher cap, low multiple names that haven't quite caught the fire of like the Facebooks, and which is now almost up 100% from its IPO. If anybody's scoring at home, the least successful IPO in history actually has not been. It's actually turned out a little better. So.
Yeah, if all those crazies who flocked in just were able to hold it for a year or so and take all that pain, then they're doing it. Hopefully they did the old repair strategy down there at the bottom, and then they're sitting pretty.
Yep. So I think that the technology sector is still, the smartphone is unleashing all kinds of positive things. Some negative if you have kids and all they do is spend all day on your smartphone. But I think we are starting to see some of that value start to creak out, so to speak.
You mentioned Facebook, so we can't move on from the trading block until we hit on a little bit more on Facebook, just because they've been all over the news lately, of course, with their, some may say ridiculous, some may say prescient acquisition of WhatsApp for $19 billion. I've saw a lot of people writing it up this weekend and analyzing it. And, of course, WhatsApp famously doesn't really try to have any ad revenue. They slam ads on their homepage. Is a big quote from Fight Club about how ads are terrible. I believe they use some four-letter words to describe ads. So, which of course makes them a perfect fit for Facebook, which is nothing but ads. But on the side note, their revenue is essentially charging $1 a user after the first year. So you get a year free, then you charge $1 a user, and that's pretty much it. And they're talking about how, there's going to be 5 billion smartphone users coming down the road, so if we can get all of them, it's going to look good. So essentially, their whole MO for paying off this $19 billion is if they get every single smartphone user on the planet to use them and pay them $1, they can pay it off in about 4 years.
There is something, though, to this. I don't know if you guys, Alex remembers, but, in the late 80s and early 90s, or mostly late 80s, I remember like the guy that started McCaw Cellular buying up all those, what do they call those, pops? The person, basically you're buying the potential customer in a cell area, and he was paying, I don't know, $14 a pop or something like that. And everybody thought he's crazy, and he was buying lots of junk bonds and issuing junk bonds. And that's how Milken got, made some money. And what happened? He bought all those cell phone licenses, and everybody thought he was nuts, and then he made a fortune.
Yes, there certainly is that possibility that there is some gold here that no one else has seen, and there is, of course, a creative value to bringing those people in, keeping them in the Facebook universe, obviously. I don't know about 19 billion. We're certainly not a fundamental analysis show here. I'm sure the guys at Google have to be laughing because they were rumored to be tossing around 10 billion, which in and of itself is pretty crazy. And then they see what they ended up causing Facebook to pay. They must be laughing all the way home right now over there saying, oh, thank God. Look what we made them do over there. So interesting stuff. Facebook, of course, lighting up the old tape, up about $2 again today. Over the 70 handle. So interesting stuff cooking over there. And speaking of interesting stuff cooking, it's time to dive on into that part of the show because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the show where we break down the intriguing, the interesting, the somewhat bizarre, the even downright unusual options activity that is lighting up the old tape. And we're going to kick things off here at the top of the Odd Block with a review, actually, a little bit of a look back. We like to file these ones every now and then and say, we'll keep an eye on them, see how this one pans out. And this particular review is going to be in everyone's favorite toy maker, Mattel. Ticker symbol MAT. They closed today, $35.96, up about half a point or so on the day today. This is a name that does about 2,400 contracts a day, doing about 2,000 again today. So not lighting it up today, but back in the end of December, end of the year, they were. Back on December 30th, when we profiled this originally, we highlighted, surprise, surprise, a lot of upside call love out there in Mattel. At the time, the stock was trading about $10 higher, a little more, trading $47.63. Looked like it might even be heading higher, and someone certainly believed that because someone piled into a ton to the tune of 6,287 of the Mattel Feb 48s for prices around $1.10 to all the way up to $1.45. So this guy was pushing the 50 handle before he had to break even on these. There was no open interest, just 75 contracts. This was all opening paper. They went up in a lot of mid-sized blocks, people lifting the offer throughout much of the session. So someone really wanted to get into these calls, thought there was a lot of room to run there on Mattel. And what ended up happening, if you look at a chart of Mattel, you can see for yourself, listeners, that was pretty much it. It was a one and done. It flirted briefly with the 48 handle right around that day, about the 30th, and then never really looked back from that point. So it kind of just took off down the other side of that cliff and never got close to there again before Feb expiration. So if these were indeed, as it seemed when we wrote them up, these were just naked, outright upside call buys. We didn't see any signs of stock going up with these, so take these at face value. This was someone gobbling up a lot of upside and spending a lot to do it. That pretty much went the way of the dodo, again, which is why we say, hey, maybe you don't just buy upside all the time. Maybe you do a few of the other strategies we've outlined here time and again. If they were indeed, somehow, if they did go up tied to stock, if we missed it, then these were pretty much a home run. But I'm guessing that was not the case. Is that your take as well, Senior Andrew?
Senior Andrew says yes. They bought, I just think that was like the whole end of the season, bullish, Christmas, blah, 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 blah type of thing. So, and it didn't pan out. Real simple.
Yeah, everyone always says, hey, these people know something, let's pile in after them. Yet another example, another shining example from the Odd Block that size money, not always the smart money. Despite what Tosaw may tell you, don't listen to that man. All right. Next up is the one Andrew alluded to earlier. We're getting into that time of the season. We had CES earlier. Now, of course, Mobile World Congress. So a lot of news coming on the mobile front. No surprise that we might be seeing some action in some of these players on the mobile space, including Nvidia, who makes a lot of the processors, the Tegra processors, and other things for a lot of the mobile handsets out there. They are, of course, ticker symbol NVDA, closing today, $18.88. And what we saw today is, their ADV is about 13,000 contracts. Saw nearly 90,000 going up today. Looks like a bunch of in-the-money calls And that combined with the volume, in particular, was the March 16s. We profiled them going up about 30,000 times. By the end of the day, it looks like they did a total of, about 30,000 total on the day as well, off about 12,000 open interest. And the fact that these are in the money calls, the fact that there's about 12,000 open interest, so the number going up is about 2x8 the open interest out there, and the fact that there is a big divvy coming tomorrow. Ding ding, looks like a div play. Is that your take as well, Senior Rock Lobster?
Yeah, I mean, a div play for 8 cents. So
yeah, you got to love these.
It is 8 cents.
That might be the title of the show. It is 8 cents.
Calls. But what was very interesting as well is some June 20 calls were trading, which it looks like somebody posted a 67-cent bid, and it got hit. So definitely, and actually there's been some volume in Nvidia lately. If you look at the IV, it's jumped a little bit last couple of days. So somebody's buying some calls in there, buying some premium in there, looking for a big upside move. But this one was, like they said, they got rid of div plays, but they didn't get rid of div plays.
Yeah, I don't think all of that has gone through on the OCC side yet. They proposed it, they put it out there for comment and stuff. These things are glacial at best. So I don't think we talked about it before. Them kind of curtailing div plays. That hasn't all really come to pass, at least as far as I've seen yet, as evidenced by the fact that they still go up. This being a smaller one, only about 30,000 contracts. And you're right, there is some actual legit volume going up here on these June 20s. These June 20s. Of course, upside calls take for legit how much you want, but at least those aren't a div play. Well, if they are, he's doing something wrong. He needs to go back to his textbooks and check them again. But other than that, yeah, unless this div they're coming out with is in June is going to be enormous. Maybe I'm missing something there. But yeah, other than that, interesting stuff. And yeah, not surprising that someone might be loading up on a little bit of upside in Nvidia. There might be a lot of potential rumors coming out of there. Of course, that stock has had a bit of a run of late anyway, going into these events here at Mobile World Congress. They are up a couple of dollars just in the last few sessions. So this guy, whoever is loading up on this actual upside, clearly thinking that perhaps more room to run. Only about 2,400 contracts open on that strike. So that's clearly some opening paper out there in Nvidia. An interesting one, perhaps one we'll file in the to-watch column to see if that comes to pass, if that recent rally in Nvidia continues, or if this guy is going to be like our friend out there in December in Mattel, and he pretty much is picking the top, one way or the other. We shall find out. All right, next up, Senior Rock Lobster, none other than a name we've delved into a few times here on the old Odd Block. This is WisdomTree, the India earnings. This is EPI, ticker symbol, closing today, $16.78, essentially unched on the day. This is another name doing some size today. This is the name that does about 3,300 contracts a day, doing a whopping 126,000 today. So size, no matter how you parse it, looks like we got a time spread on our hands. Walk us through this one here, the Ape June put spread, Senior Lobster.
Yeah, buyers, and they were in pretty big blocks essentially. Buying that looks like all the June printed on the buy side, the April sell side. What's strange about this is like, okay, so there's all this, there's emerging markets issues, there is some uncertainty, and you kind of buy an at the money time spread. So this was a little puzzling that way. Like this EPI, this index isn't going to move anywhere. So basically this trader, this investor is betting EPI just does not move anywhere through April. It's almost exactly the opposite of what I would do, I think.
I like that. Because, of course, you're right. You're buying that time spread, buying the long term, selling the near term. Of course, that's a heavily short gamma type trade. Not exactly conducive to some fluctuations in the emerging markets. So you're right. That is someone who's putting on a bet that may involve a few antacids between now and expiration, shall we say.
And the only thing, I think there's a big election coming in India. And I don't know when that date is. It might be a June date, which, I could see the timing then for the spread. But, given kind of the market's propensity to on any rocket launched in any banana republic at this point, we drop, some amount. I find that this is a tough one to figure out, but it's a fairly sizable bet at 45,000 contracts.
Yeah, this guy's putting his money where his mouth is. I think it's the first time we've had this on the show. That is the exact opposite of what I would do. I like that one. That's a good one. Yeah, this guy he reminds me of the guys who were, short premium up the wazoo going on expiration Friday, and they were just popping Tums all day and sweating all day. And then they thought it was the best trade at the end of the day when it didn't move anywhere. This guy's going to be sweating between now and April. Let's just say that. Interesting play, one to watch. I think maybe we'll come back to that one too. It's always worthy of looking back too at seeing how time spreads fare. Maybe some of the adjustments we would have made, maybe one of the ones he maybe did between now and then, because time spreads are very much an adjustment game. So we can look that spread will evolve over time, and maybe we'll check back in with it and see how it's looking and see how this guy is really sweating or not. Who knows? Maybe he's a genius and he'll be sitting right at that strike a couple months from now, Andrew. I highly doubt it, but
I see that. It's like, oh my gosh. I mean, I see that its range has been basically from 16 to 17 over the last 6 months, but that's if it stays there, I guess. We'll see.
All right. So next up on the old odd block, we got some more puts lighting up the old tape. In good old New York Community Bank Corp. This is ticker symbol NYCB. For those of you playing the home game, they closed today at about $16, $15.93, up about 1% on the day. A name that does a whopping 400 contracts a day, doing about 4,000 today. It looks like the bulk of those came up on the old April 15 puts. Someone blasting out about a ton of them for a dime. Is this? Let's look at this opening here, sir. Are we closing out some size moolah profits here?
Just opening. There's almost no open interest.
Yeah, look at that. No open interest. So yes, this guy is. He really wants that dime.
Yep.
How else can you put it?
Well, it's funny when Alex was talking about risk and people looking at risk, and Tosaw was talking about risk, and then this guy comes in, he just whacks all these puts out at a dime. So I think people want to own the. To me, you got to want to. If you do that, you want to own the stock. So, maybe that's what they want. But I would only sell a put like that if I was destined to own the stock.
Yes, that just seems pretty clear. That's about $1 away from where it's trading right now. So those are a pretty high probability of perhaps coming due. And you're right. We shouldn't mock. Maybe he does want to buy the stock, and in which case it's better than just working a limit buying the stock. So. There you go. He's getting a dime for his trouble. So we shouldn't mock here. We should really reach out and embrace our brethren.
It is definitely a useful way to purchase stock or to trade the option if you are expecting to take the underlying. That's the key part there.
Yes, we should probably salute this person for using options in a somewhat appropriate fashion instead of just gobbling up stock with a limit order like every other schmo out there. He's actually using options, and we're giving him a hard time. So shame on us. Unless he's just blasting out puts for a dime, then I wag my finger at him and say, no, sir.
Yes, well, he's like, I want my 3,000.
I want my dime. There's better ways to get a dime, is what I'm saying. If you're just going for the dime, there are better ways to get a dime. Let me just toss that out there. All right, and last up, wouldn't be the odd block without some sort of biotech pharmaceutical name. And today's biotech du jour is Infinity Pharmaceuticals, closing today $13.98, essentially unched on the day. This is the name that does about 1,700 contracts a day, so not too bad from an odd block perspective. Doing about 5,500 today, and looks like the lion's share of those again coming in the puts, coming in the March 12s this time. A lot of them also going up near the bid. Could we indeed have yet another put seller out there? This guy at least getting 22 cents for his trouble. Again, no open interest, 45 contracts, so all opening on the downside here in good old Infinity.
Earnings come out, in the cycle too. So he could
actually tomorrow. They come out tomorrow.
He could be on the hook.
Yeah,
I guess so.
There's another guy who wants some stock.
They're like 22 cents. I
could deal with 22 cents on a $14 name a little more than I can some of these other ones, I suppose.
Yep.
It's not bad. It's a month out still, but he might want some stock. In which case, I shan't finger wag. It's better than a dime.
It is.
We're moving up the ladder here.
But again, I thought for on a day when I think people have they're executing long-term strategies with a little bit of volatility and some of this stuff, and I think that's if you want to own that stuff. Again, I don't know much about either of those companies, but they do have a shot at owning some. That's for sure.
Well done. You have succeeded in potentially buying a large amount of stock. All right. And at least something to highlight aside from upside call buying here on the old odd block. Sometimes we go the put selling route. That's also fun. You heard Uncle Mike. He loves to blast out puts these days. So there you go. Everyone's doing it. Might as well get in what the cool kids are. All right. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is, of course, the portion of the program where the Viceroy takes the reins and gives us a bit of a guided behind-the-scenes tour into all of the inner workings of the innermost sanctum known as Options Express. And listeners, if you wondered why Alex has been a little bit quiet on the show today, it's because the OX Firewall Skype gods are not exactly smiling upon him. So he may be a little truncated even in this segment as well, but we'll do our best. Alex, I know last week I had a chance to actually speak for you, which was always fun, talking about your response to our pal Snowbird in the old mail block and what's going on with risk after hours over there. So what else is catching your eye? What else is moving the old tape, moving the needle, if you will, over there in the land of OX these days?
So everything was busy today, and as I say, Mark, I hope you can hear this, but the traditional option names, I mean, the stuff that we see activity in every day, the Netflixes, the Pricelines, the Teslas, we're all lighting up the tape today. As I mentioned earlier, Facebook has become the new Lulu here. It's become the perennial active trader. But, we started the day with a sizable rally. No one understood why, but that didn't seem to drive our customers to the sidelines. The desks were busy today, both the options desk and the futures desk. The energy complex was a lot of that today, and there were a couple stories today about Venezuelan oil shock, and I think that drove things higher. Nat gas actually backed off a little bit today with a little bit of the better weather, although we're going to get it again here in the Chicago area in the middle of this week. But today was a pretty typical options day in terms of the names that traded. Obviously, we lost ground going into the close, so it was a little bit of a sloppy close, but an interesting day because none of us seemed to have a sense of why we were rallying today other than the fact that this market just seems to want to go higher.
I forgot to mention at the top of the show, but I know one of your OX clientele's favorites reporting today after the bell. That is indeed the Stealth Tesla, a.k.a. SolarCity. They closed today $78.55. You could have bought all you wanted of that Feb Week 4 78 straddle for about $10 even. And right now in the after hours, we're seeing them out down about a little over $3. So far, if you gobbled up that straddle, you're hurting. But indeed, we'll see. The night is young. We'll see how the after hours are lighting up. I'm sure SolarCity was driving the desk a little bit today as well, Alex.
Yeah, it's a perennial up here, and I've actually talked to some of our customers who don't trade it as a solar play, but trade it as a hybrid solar play, Elon Musk play. So, and as we were coming on the show, one of the other solar companies filed bankruptcy. So I don't know if that's helping to lead it lower, or maybe it's going to be the last man standing. But an interesting play. Nobody seems to want to bet big against Elon Musk. On OX Social this year, probably the stock people like to hate the most was Tesla. And every time it would go down, the people who were supporting it were subject to a couple people coming out, calling it the next, I hate to use the analogy, Lehman Brothers, but they were calling it the next Lehman Brothers. And, look at Tesla. Stock is up a couple 100%. And the cars are on the boat to China now. So interesting time.
Yeah, if you're trading both of those names, you're pretty much playing the what will Elon Musk tweet next game, and how much vol will that inject into my options. A fun game, as you can see, if you're on the right side of it. Interesting stuff. Thank you for that, Mr. Viceroy. And now it's time to keep on rolling right on into the strategy block.
The strategy block.
All right, I always love that intro. It just prompts the imagery of Uncle Mike just stroking his chin by the roaring fire, brandy snifter and smoking jacket on, and just prepared to dispense options, wit, and wisdom. And today, Uncle Mike, my minions have been off for a while, as you might imagine, with all the February vacations and whatnot. But we have them back in session here, and they're whispering in my ear something about adjustments. That's what they're telling me. They keep telling me adjustments. I keep feeding them jams and jellies. They keep telling me more about adjustments. So I'm just going to go out on a limb and say you are going to talk about adjustments, sir. So how do they fare? Do my minions merit more delicious jams and jellies?
Well, I think they do, and it's good to hear that you finally got rid of those birdies and went with the minions.
Yeah, those
and
birdies,
up.
Those birdie unions, at the end of the day, I got fed up with it. They kept demanding more seed, and it was an ugly scene. So the minions, at least from a cost-effective standpoint, much better.
That's good. That's good. And then, I'll just quote the movie that I saw last weekend. Everything is awesome. It's always good to be part of a team.
That was a good one. I like that. We've been humming that song a little bit in our house as well.
Yeah, but anyway, I want to go through a trade that I had on last week, and this is part of a bigger picture, but I just want to focus on, this is one where I'm long a June 183 call on SPY, and I've been long it for a while. We've been doing various spreads to finance the time premium for, pretty much the whole time. And the spread with which I want to highlight is last week. Last week on February 18th, we did a weekly credit spread to where we were short the February expiration 183 half, 180 half put spread. And so what I want to go through here is what we did to protect this to the downside. Because if the market stays the same or goes up, if you're short a put spread, it's any idiot could do it, quite frankly. But I want to go through a real life example with real money of what we did when it went against us. Now, the 183 call, that one, we'd have to have a pretty big move for us to do an adjustment on that, either to the upside or the downside, and by pretty big, probably 4 or 5 points in SPY for us to even look at it. So let's just disregard that for now for sake of this example. Now, on this 183 half, 180 half put spread with which I was short, I have probably about $5 to $7 allocated to where we can use that for being short that put spread. And the only reason that we went to a $3 spread is because I think it was, I'm looking here, I paid 8 cents for the 180 half put. And by doing that, I think I paid like an extra 3 cents to get like an extra $2 of protection. So hence the reason with which I did that. Normally, I typically go maybe $5 or $6 on these spreads. Well, it just depends on market conditions. And this is one of those conditions to where if it's an extra penny or two, what the heck. So sure enough, put on that put spread on February 18th, which was the first day of trading last week on a Tuesday. And naturally, that Wednesday, market goes against me, and I had to get out of it. Now, with this, I'm not a fan of staying in credit spreads until it touches the short strike, unless you have other parts to the puzzle, which in this case I do. But once again, I want to focus, this is just one piece of the puzzle. So we get to the 183 half mark, and so I had to get out of it. So we get out of that spread. Now, at that stage, I end up getting out of that spread for a 26-cent loss altogether. At that point, I did the down and out roll. Now, the down and out roll is one that a lot of credit spreaders can do, but if you rely on this and only this can get you into trouble. What I want to highlight is how I did it, and it did work the first time. I still have plenty more bullets in my gun if it continues to go against me. There's still more money on the sidelines. There's still more things with which I can do. This is just the first bullet with which I had to use in the adjustment. So the next position with which I got into was the February week 4, meaning this Friday's expiration, 182, 177 put spread. Now, the first thing that I want to mention is I'm taking on an additional $2 in risk. However, I was prepared to take on that much risk in the first place. The only reason I didn't have that much in the first place is because I got such a good deal on the 180 half put instead of the 178 half put the first time. I'll pay an extra penny or two for $2 in additional protection. So I did that, went overnight, and then, of course, continued to sweat like I always do, which is fine. Looking at the futures, didn't sleep. I never sleep. I don't believe in sleeping or going to the bathroom. I stare at my screen all day, by gosh. So I'm looking at that, and futures are down, but I'm like, well, okay, we're still looking at our equivalent open the next day. I'm looking at this on the night of February 19th. We're still above 182, so we'll go to the next bullet if we have to. And I was looking at a few things, but at that point, the market then rallied the next day. Now, when the market rallies the next day, typically I'm thinking something along the lines of, oh, crap, why did I roll that thing down? I could have just stayed in the original one. That's probably what a lot of traders think. Here's an example with which I want to talk to you about to where it didn't really work out so badly. Probably about, and I was doing this as more of a study point, the market did rally the following day on the 19th of February, that Wednesday. And so as it rallied, I'm looking at it and I'm thinking, okay, I got into this 182, 177 put spread for actually a credit of 7 cents, meaning the loss that I took on the February traditional month, whatever you want to call it, put spread, I made up for it with the additional credit that I got on the February week 4 credit spread. Now, once again, I want to remind you that there's no free lunch. Don't think of this as free money by any means, because I'm just simply trading more time for more money. So don't think that I am trying to say, oh, you just get more credits, just keep rolling it down, everything's fine. No, it doesn't work that way. I'm taking on an extra 7 days of risk for getting that extra 7 cents. So with that in mind, as it's rallying, I noticed something interesting. Probably about 10:30 in the morning, I'm looking at it, and I even emailed Longo on it. I could have gotten back to this, I could have rolled back to exactly where I was before for a 7-cent debit, meaning I could have gone right back to where I started when the S&P even moved another 5 points to the upside, and everything would have been exactly as it was before. Now, I chose not to do that because that's known as over trading, and that's something that can get you into trouble a lot of times. But I want to explain to you something when you're actually trading a credit spread or a bull put spread. When doing so, not only are you bullish on the market, so to speak, but you're also short volatility. When the market went down on February 19th, or I'm sorry, on February, or when the market went down on February 19th and I made this roll, and then subsequently the next day on February 20th when it actually rallied, volatility went down a pretty significant amount. So because of that, the greater amount of 2-week juice I got in the new put spread outweighed the lesser amount of front week juice that I could have had in the current week. So moral to the story is this, folks. If you're going to play the credit spread roll down game, and if it goes against you, understand that you're also taking on a short volatility position when doing so. So if the market rallies, the volatility that went down in the second week put spread made up for the fact of it worked in such a way to where I could have gotten right back to where I started due to volatility. The other thing that I want to mention with this is, had I done nothing and the market continued to go down further, I would have blown out this section of the account, not the whole account, but I would have had a blowout if I would have had this in the entire account. So don't be shy about getting out of spreads before they go against you too much. And that is one to grow on.
I like it. The credit spread roll down game. I like that. Might be a good title going forward, sir. That's a good one. All right, and that is going to do it for the old strategy block, aka the strategery block, as Uncle Mike likes to refer to it. And now we're going to keep on rolling into our final segment, Around the Block.
Around the Block.
All right, right, and welcome to Around the Block. Before I keep going, let me just remind you, Uncle Mike says he does not like to refer to it as that, so I may have put words in his mouth there just a little bit. Listeners, welcome, of course, to the Around the Block. This is the portion of the show where we peer deep into the future, let you know what we're watching, keeping an eye on for the rest of the week. And as I mentioned at the top of the show, a lot of stuff going on. Mobile World Congress, kind of keeping the mobile world aflame, aflutter. We might hear of the new Samsung devices. Of course, Nvidia. People thinking there's more going on out there with Nvidia as well. A lot of the mobile makers. Facebook's making another speech out there. Hey, maybe they're gobbling somebody else for $19 billion out there. Who knows what's going on out there in Barcelona. We also have a few things going on this week. We mentioned SolarCity earlier in the show. Let's do one last check-in on the old Elon Musk name, and about the same, about unched about $3 down or so. So again, if you legged into that $10 straddle, woe is you at that point, unless there was no real chance to get any stock off. So so not looking too good. We also have, staying on the solar tip, we have First Solar before the bell tomorrow. So hopefully if you're looking to play that one, you already got your positions on. Let's see how they closed today. Closed today up about 3.5%. They actually, no, hold on. They're saying here. Let me revise that, actually, listeners. They're saying here now, my initial note was wrong. They're after the bell tomorrow, so you do have a little bit of time. You have one more session to get into First Solar, closing today about $57.75, up about 3.5% on the old day. And then we have Target on Wednesday. See how they recovered from that scandal at the end of the year last year. And, of course, jobless claims on Thursday. A lot to keep an eye on. Senior Giovinazzi, a.k.a. the Rock Lobster, what are you watching for the rest of this week, sir?
Well, the jobless claims, I mean, that's been moving the market a little bit. But for the most part, it's like, what's been moving the market? Just, small headline news seems like it's really blasting stocks around. So I'm kind of, again, I think we're not selling tons of Gamma right now. It almost looked pretty good last week, but now not a huge seller of it. Some, again, keeping an eye on gold and the natural gas market. There's been some interesting stuff to do there. But, that's about it until something really starts to move. And I'm waiting. In Facebook, looks like I think it's going to continue to keep moving. Just don't know where. But, a trade on maybe like a little back spread, something on there sooner or later, because it's up like a whole heck of a lot. Another one I'm looking at is Walgreens. Why that stock is up like 15% or something like that, or 20% since the middle of, or the early February, is beyond me. So definitely, some stocks that are moving a lot more than I think they should, or, of course it's just an opinion, but it's like, what's really driving these things? So I find it interesting that there is some money into the market finding these names. People are spending some good old dollars to buy stocks.
And again, listeners, if you're playing the home game and you want to do the exact opposite of Andrew Giovinazzi right now, then by all means, buy some time spreads out there in the developing market ETFs and those products, because, hey, what can happen out there, right? And also blast out a bunch.
Those stocks can't move.
Yeah, and blast out a bunch of puts for a dime, and then you're looking good. I like it. That's a good portfolio. I'm going to go do that right now as soon as we get off the show. All right, Mr. Tosaw, what are you watching the rest of this week, sir?
Well, I want to see if there's going to never be a better time to sell your Dow positions and your Russell positions than in the next few days. The S&P had a new all-time high today, and I'm curious to see if the Russell, the Dow, and the other markets in general will follow. It's always interesting to me when stuff like this happens, and just be careful, folks. Now, it might not be a bad time to buy some protective puts.
You degenerate premium buyer, you.
Well, unless you want to sell them.
Only for a dime or less. That's where That's where I get interested, sir. Now you got my attention. All right. Speaking of dime put sellers, Mr. Viceroy, what are you watching for the rest of this week, sir?
Fundamentals. As much as I'm guilty of saying that, the breadth of the rally today was stunning. Just stunning. And if you looked at all the kind of traditional names, the Boeings, the Cummings, the Exxon, all the stuff we really don't talk about, that's kind of that conservative mainstream portfolio, all the big market cap stocks, everything was up big today. The only things down today were retail. fact, the only red lights on my screen are retail and volatility. There's some retail earnings due this week, as you mentioned, but I don't think anybody cares. I think JCPenney reports this week. I don't think anybody cares about that. You talked about Target a little bit. The 10-year, at some point, I think the 10-year is going to pick up again and take out the 3 level, but right now it seems not to be an issue. Gold and oil. And oil is going to get a shock if Venezuela continues the path it's going down. It's going to drive the price up, which, of course, is going to surprise everybody here because we have all this oil now, but we're still paying the world price for it. But I don't think it's going to shock the market the way it would have years ago when we imported a ton. So I hate to say I'm looking at fundamentals, but I'm looking at fundamentals. And the breadth of the rally today was just stunning, just amazing.
I've always said, sir, that you were a diehard fundamentalist, and now you have proven me correct over time. I knew that about you, sir. All right. And that is going to do it for the Around the Block segment. It's also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts, my partners in crime, to see what they have cooking that may interest you. Who knows? Maybe you like it, maybe you don't. We'll see. Starting off with Uncle Mike Tosaw. What is coming up in the old RCM webinar train?
Broadcasting live this Thursday night, 9:30 p.m. Eastern Time. We'll be discussing the Iron Condor on ways with which you can possibly do adjustments if need be, or just in the Condor in general. Cut that, Kyle. To find out more information on signing up, go to rcmwealthadvisors.com/webinar.
All right, and Mr. Rock Lobster, what is cooking in the land of the pit?
It's funny you mentioned, but how to sell puts in an ugly market. March 8th, I believe, Saturday, March 8th. Mark and I will be doing a webinar on, basically thinking about selling puts and how we think you should sell puts. So, again, I don't think this is really a great market to just sell puts in unless you really, really want to own the underlying. So that essentially will be our webinar. It'll be usually there are good tips and tricks for anybody investing that wants to kind of see how to make these put things work in the way they were designed, which is usually what the biggest problem is. You get good ideas, but you kind of use the option for sort of not the way they were designed, which causes sometimes dismay.
So the webinar really is how to sell puts for a dime. That's what you're telling me?
Exactly.
I love it. I love it. All right, sir. I'll be tuning in. I like that stuff. And last, but certainly not least, Mr. Viceroy, what is coming up down the old road here at OX Education?
A full calendar of webinars and live events are restarting in March. So I'm just going to showcase 3 special guests that are joining us for the webinars in the next couple weeks. And Wednesday of this week, John Kicklighter from FXCM is going to be talking Forex. On Thursday, another guest that's new to the webinar series, Ludwig Garrick, is going to be talking about a midterm view of futures. And he's a strong market technician, very well known in the industry. Also Thursday, Russell Rhodes from SIBO is going to be talking about short-term volatility trading using exchange-traded products. And our first live event of the year, March 8th, Jimmy Rouzan will be in Crystal City outside of D.C., right near Reagan Airport. That's a live event, but as is the case here now at OX, all our live events are virtual. So if you want to join in from the comfort of your home with the Cavalier on your lap and the cup of hot chocolate, just come to the site and you can participate on the virtual side.
Sounds good. Thank you for that, Mr. Viceroy. And of course, on behalf of Uncle Mike and the Rock Lobster and the Viceroy, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, for sending in such great questions. We'll get to them on Thursday. Don't forget to check out the mobile app, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.